Happy Sunday. We're going to do a trading review this week and go over all the trades we made. We're going to do it weekly, but we're just going to do from the beginning of January to the 9th on this week. So January 2nd to the 9th. But what we basically did is we went ahead and took our trading history, our profit and loss statement, and of course, our profit and loss by stocks. And we just had a conversation with ChatGPT, basically doing a code review. How can I improve? Hey, if you were Oliver, what would you tell me? Hey, um, what am I best at? What am I not best at? How could I improve? What's the overall goal for this week? So just went ahead and had this quick conversation, but I didn't read it. So this will be the first time I read it, and this will just again serve as a docu-series, just continuing to make me a better trader, and we'll just do these weekly. I don't know if it'll be Saturday or Sunday, just depends. But all right, let's go first. First, we uploaded the profit and loss statement. So hey, perfect. I got the profit and loss. It was a clean trader focused breakdown of my takeaway. So looks like for the week I was profitable. 7 days, 4 green days, 2 red days, 66% win rate. Okay, can't go wrong with that. Solid week. Free structure that I'm operating under. So I guess chart just says I'm free. Who cares? So January was a loss. Uh, I don't remember that day. Okay, so one other thing that we did. So, I mean, you're following the docu-series ideally if you're watching this. So we took the transcripts from every video and we also added that context into this trade review for the week. So it may get into detail and have some inside information that I can't really think of. So like I don't remember January 2nd or the 6th or any of that. So maybe the conversation gets interesting. So let's just read it. So okay. I remember this day though. I remember 6th. I was real good on Uber. I think Uber had done something. And I think the fifth was like oil or something, Venezuela. I remember yesterday or Friday because I was up like 500 and then I lost it all. So, uh, and I remember the eighth because that was the Apple trade. I wanted to learn my lesson. I only took one trade. I don't remember this. I don't remember the seventh. So, average win is 4, average loss is 4. That's not good. It needs to be like 2 to 1 so that win size does not equal my loss size. My edge is coming from win rate and discipline, not oversized winners. This is very valid Oliver Velez style trading, controlled, repeatable, professional. Fees, reality check, total fees paid 300. That's nearly 40% of your net profit this week. Not mean you're doing something wrong. It means size and over trading on marginal setups is getting punished fast. Your best days are January 6th, January 7th. Absorb fees easily. Your worst days are amplified by fees. You don't need more trades. You need fewer, cleaner, higher quality executions. I agree with that. I mean, really, we made more than that our total week in one day. So we're clearly over trading. Um, we're not taking the best setups, not taking the A plus setups. Um, and every time I use high size, I do usually F up my winning. So your biggest size days were your best profit and loss days. Understandable. Small size red days are still occurring. Chop, late entries, trading during low quality time windows. Best day profile, medium, high size, strong follow through, likely align with A plus setups, VBS, elephant bars, trend continuations. Tactical adjustments for next week's protect the red days, hard max loss. So our max loss right now is 400. So it's interesting that it wants to lower my loss a little bit more, probably to make me better. If first trade fails, reduce size or stop. I like that. Double down on what worked January 6th and 7th. Trade less, size better. Focus on clear trend days, early session momentum, confirmed setups, fee awareness rule. Ask before each trade, is this setup worth paying 40 to 70 in fees? If not, pass. A, I like that. I like that a lot. That's a good one. That is a good one. Highlight this. Big picture. This is professional grade trading behavior, controlled down downs, positive expectancies, no blow up days. Consistency is better than hero trades. You're trading like someone building equity curves, not dopamine hits. Next step. We can match these days. No, what do we do? We just informed it that my max loss is 400. Okay, so max loss, that actually aligns up with most perfectly with your profit and loss. It's already telling us let's lock this in and tune it, not fight it. Max loss confirmed, daily max 400. Your worst days, January 2nd and January 8th. Already mentioned behavior anchored around this number. That's good. We just need to enforce it cleaner. Refined risk framework built around 400, soft stop and hard versus hard stop. Think in two layers. Soft stop is 300, size down or switch to A stops only. So let's say I'm trading the open and I lose the first one and the second one, then I need to only probably wait till midday and only take A plus setups. Okay, I can get behind that. That sounds logical. This protects you from fees pushing past your tune in. Trade count cap on red days based on fees, average loss size. You're losing trades per day is two. If trade number one fails badly, trade two is half the size. If trade two fails, days done. This presents death by 1,000 cuts. Okay. I mean, that's gonna be hard to do, but I can agree with it. The size logic that matches your ego, matches your edge. Got a big ego. I always did like Kanye West. Uh, means selectivity, not aggressive. Rule of thumb. If the setup isn't obvious in 5 seconds, you don't trade it. I like that. If it doesn't work within the first 5 seconds, well, that's not what it's saying. Your best days came when you weren't trying to make it back. You let trades work. You traded structure, not emotion. Your worst days were not disasters. They were boundary leaks. Fixing that turns 450 days into 300 days, which alone adds 300 to 600 per month to expectancy. What this means long term, with a 66% win rate, average win of 400, max loss capped at 400. You are operating a survivable, scalable system. That's how traders last. That's how accounts grow. So the next thing that we went ahead and did is we uploaded our trade history with profit and loss statement. So this is exactly what we needed. Now we can tie behavior executions to daily profit and loss, not just look at the scoreboard. I've cleared your trade history and aligned it by dates so we can reason like a prop risk manager, not emotionally. How we're matching trades to profit and loss. Okay, for each day, we're looking at time of first trade, trade clustering, flip behavior, bought, sold, sold short, whether losses came early or late, whether max loss crept, whatever, whatever. So day by day, January 2nd, immediate long exit, then short attempt, then rapid flip back long, multiple executions. This is a thesis violation day, not a bad setup day. You were reacting to price instead of letting it confirm. If your first trade fails, you flip your direction within 5 minutes. You should be on half size max or done. Yeah, I mean, you've already said that. I agree with that. Clean entries. This was a good day. Can't learn too much from a good day. So trade more like that. Still with rules. Okay, so bad day, very small size, still red, likely chopped or boredom trades. This is a no trade day disguised as a trade day. You didn't violate size rules, you violated selection rules. If you downshift size and the market still doesn't pay you, that's the market telling you not today. Okay. Core insights. Your losses are not coming from oversizing. I thought all my losses were coming from oversizing. That's interesting. They're not, your losses are not coming from holding losers. Okay. I thought it was. And it's not coming from one catastrophic mistake. That's interesting because I thought those were all my issues. No, it's early session over participation. I do trade too much in the morning sometimes. Direction flipping. I do love a good stop and reverse. Trading when there's no A plus setup. So that's not taking bull 180s, elephant bars, tail bars. So we're taking one too many color changes probably. I like a good color change though. I guess it's the selection of the color change. Probably need to make sure it's a VBS on another time frame or something like that. So rule additions built for you. No flip rule. If you go long, short within 5 minutes, size must be cut by 50% or stop trading. First 20-minute filter. If the first 20 minutes are choppy, multiple flips, no follow through, you stand down until a cooler level forms. Your max forward loss is correct. The only leak is fees pushing you past it, so hard stop should trigger at 350. Ooh, that's smart. That is smart. This is not a systematic problem. This is elite level refinement. You are one or two behavioral constraints away from fewer red days, bigger green days, and much smoother equity. Okay, so then we uploaded it by stock. So this is excellent data. Now we can see where your edge actually lives. So our best stock was Uber. Amazon was next. Visa was after that. Apple, we were kind of broke even. StudiX, we kind of took that out of our list, but we were down on it, even though it had the big news day. Go figure. Google, we were down. 300 in Google ain't a lot, though, to be honest with you. And these are our most expensive stocks. Well, Visa is our most expensive, but these are the next two. So to be down on those isn't a big deal, I don't think. So biggest insights, this is not subtle. Your edge is in high ATR, momentum trend remains, clean intraday ranges, stock that respects continuations. Okay, your losses are concentrated in Google and JPM, slower, heavier, more algorithmic names, chop, fake levels, punish flipping. Oh yeah, yeah they do. Bleed fees. Some names cannot absorb your fee structure. Example 347. Okay, meanwhile, okay. So only trade Uber, Amazon, and Visa. I bet that would be a nice strategy. I'm probably not going to use it, but that would be a nice strategy. On CVX, maybe. No trade for Google and JPM. Oh man, they're trying to kill my ego. I want to trade Google and Chase. Mm-mm-mm-mm. Stock specific guy. Here's max loss. First trade fails. Done with that symbol. Okay. The minimum absorption rule. If the stock can't move two risk units before fees or stalls immediately after entry, it's not your stock today. Uber and Amazon pass clearly. Remember flip trades, early selection chop, small size red days. Those cluster heavy in Google and Chase, not for you, not psychology, vehicle mismatch. What this means for next week. Trade Uber and Amazon first, avoid Google and JPM, keep your full under max loss, increase your win rate, average winner, emotional stability. Free efficiency without trading more. This is how trader optimization levels. Now you're doing what most pros do. Okay, so then I combined the symbol and the time of day to see like, hey, when am I doing my best in trading based upon the data and everything like that. So it looks like it bucketed it to the open, uh, morning, midday, afternoon. Opens 9:30 to 10, makes sense. Morning 10 to 11, midday 11 to 1:30, afternoon 1:30 to 4, which is interesting because I usually trade 9:30 to 11, and then I might trade a little bit in between if I get bored, but really it's 2:30 to 4, so maybe I don't know. So my strongest edge is midday. That's interesting because I've been using the 5 minute and making more money on the five. My morning trades are good. It's because I lost on 2 days opening plays. But they say 10, so that's okay. So basically, it's like, dude, I'm sucking in the morning. The whole strategy is based on the fucking open. So if I could just do good on the open, and not play catch up all day, I might be killing it. Jeez. Uber pays you after the open, not during the open chaos. It's like, dude, we're trying to make money on the open. Trying to be 20-minute traders. You can't tell me that. Amazon, midday, open, morning, afternoon. I traded it mostly in the midday, next the open, then the morning, afternoon. Amazon works early to midday, then it dries up. I feel you on that. Best window open or late morning. Visa, 14 trades, 14 in the afternoon, four open, four midday. Visa's situational, not a core name. Trade only when structure is crystal clear. I added Visa late in the week, so maybe once we get more data, it'll be better. Where losers clustered midday Google, I lost a lot. That makes sense. That makes sense. Taking 1 minute time frame changes or trades, mistaken elephant bars for regular bars. I can see that. Google is highly active, low payoff. So it's basically saying I should not trade Google. It's going to say the same for stock, for Chase. JPM is slow, sticky, doesn't reward your style, especially later in the day. JPM should not be an afternoon stock for you. We might have to change our six, man. They're trying to get us out of Chase. But I figured if I could get to the trader's tax, I could just write off all my Chase uh, credit cards. So that goes against the whole game plan, man. So you need to chill out there. We need to be able to treat it. So here's the edge based upon what they would say trade. But here's the thing, like these six stocks could change. That's why this is interesting data, but I don't know how to really fully interpret it. That's why I'm going to do this more and more often and look back at the reviews because maybe this is right, but maybe it's not. This is only 1 week of data. So we'll have to, that's kind of one of the limitations of AI, unless you build your own model on your own computer. Mm, They say they hold all this data, but it's not going to hold all this. So we'll see. But new rules to lock in. Is this stock is this stock in its green time window for me? If not, size down. I like that. I like that. Midday focus shift. Instead of randomly scanning, default to Uber midday. Now that's gangster that it's saying that. If I had more data in here, it'd be interesting what that is, but I could get down with that. Just sitting on Uber all day. Okay, let's see. Uh, yeah, just sitting on Uber all day. That's what it said, midday. So let's act like if we just traded Uber all day, that's a sell, that's a buy. We knew this is a build up with a break. It's saying I should just trade one stock. Hmm, interesting. Interesting. Okay, I'll cut down over trading, fees, mental fatigue. I like it. Hard no zones. No Google between 11 and 1:30. No Chase after 1:30. These are data breaks, not emotional rules. You don't need more indicators, more size, more symbols. You need the right stock, the right time. Okay, so then I said tie this with basically Oliver's strategy. This is where the snaps into professional playbook. We're going to build a setup, symbol, time window, execution rules, exactly how Oliver Zyl's desk would do it. So time window 9:30 to 10, clearing elephant bars, breaks primary, high, low, wide range. No. I think this is, I didn't like this part of the conversation. Time windows, morning. We can go over it, but it's saying the morning we should just do clearing elephant bars, which obvious, that's what Oliver says. 10 o'clock, we should probably do VBSs, which makes sense. That's what Dr. Dan does. And then 11 to 1:30, it's saying VBS continuations, which is still Dr. Dan time, which makes sense. Now, none of them trade there, only trade structure, not hope. So, it may be interesting that this says just don't trade. Only trade structure, CVE, break well, break and hold tight. I'm interesting that I didn't get more of like the last 15 minutes doing good. So no flip, cut size by 50% during this, during 1 to 3. So trade less. Uh, only do A plus setups. Avoid. Okay, final truth. What do we do now? Some of my trading days through. Okay, so now here's where I added. Okay, so of course we have the trading recaps, and if you just use Gemini right here, you can just do a summary of videos. You can ask all a bunch of questions about everyone's video. You don't have to even watch the videos anymore, which I guess that's good and bad. It's making our attention spans like goldfishes, so that's not good. So I wouldn't play with AI too much, but I mean, it helps. It's just you have to really work on your attention span if you're going to mess with it a lot. So that's why this is probably going to be a long video, but it's good because it's going to increase my attention span if I watch the entire video multiple times. So whatever. Um, where are we going back to? Um, okay. So that's what we did next. And it says, okay, you're proposing is exactly how discretionary traders would turn data into repeatable edge. We'll use quant data, quality data into a coherent review. Okay. It's just telling me how it's going to do it. This isn't the most important part. So here's the first video recap on Monday. It was an oil play, Google trade, whale pattern, Apple, Chase. Okay. So oil play, I did an elephant bar setup, news driven. That's interesting that it would pick that up because I said it in the video. Just go to Monday's trade, January, I don't know, January, who knows? Just go 5 videos away from this video. You'll be there. Okay. So oil play, elephant bar, early entry, correct setup, elephant bars, news, half size, Google trade, green bar takeout, support hold, vehicle mismatch. Here's my best, probably best trade, whale pattern, full 180, position of power. Okay, in my video, I go over here's how I should trade. So AI might mess this stuff up, to be quite honest with you. Let's see, let's go. Concrete, Google, one tempt, Google, elephant bar, must clear structure, vehicle setup, of A plus setup, some wrong direction of stock. Here's where I gave the next one. It went over all the trades. Perfect. Here's what I described. The key stock, Uber, top P&L controller, highest trade, time management. Need to work on time management. Fab four, elephant off 200, follow through with the BBS continuation. This could be so sweet if I just went to it. If I cared about editing videos, I could make this so sweet. What you described, Fab Four, Elephant Bar, missed initial move, profitable tail bar entry, more meat left. Verdict, setup valid, late entry, smaller range stock. Okay. So January 6th was an A minus day, executed like a B plus. That's great news. Gen 6 and Gen 7. Your own language profitable, but not a good trade. Got lucky. Could have been some. That's an execution quality issue, not a market issue. Fab Four Elephant, wrong vehicle. JPA's worst stock of the week, especially poor outside of early session. Okay. So weekly insight levels. Here's probably the important part. Holding winners like scalpers. I need to work on that. Google and JPM over analysis. Skipping A plus entries. Ego around giving back. If right stock, right time window, Fab Four Elephant, you must hold a core. Vehicle hierarchy, Uber, Amazon, Visa, Apple, no fly zone for Google and Chase. Missing an A plus trade is worse than scratching a B trade. If you hesitate, take smaller size, not zero. I respect that. I can respect that. So now what do I do? I add some more data for one day. Uh, what costs you money? Oversizing before confirmation, that makes sense. Cutting A plus trades, that makes sense. Fixating on one symbol while others line up, that makes sense. Treating all stocks the same, that makes sense. So those are probably some of the biggest things I need to improve on. Okay, so this was not a sloppy week. This was a near breakthrough week. Your losses were small, controlled, identifiable, fixable. Your wins were real, repeatable, underheld. That's the best profile a trader can have. Then I added another one. There's discipline, January 9th. Uh, okay, okay. So trend mix, tradable, low edge. So it cost me money, oversizing before confirmation, cutting A plus trades, wrong vehicles, stealing focus, an ego around giving back. So size is earned. That's a big one. So size is earned. So for example, if you sell here, you can't just sell, 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 sell. What we want to start doing is if we sell here, we can sell here. It's earning its right, sell here to add more instead of me just gambling, sell here and trying to get all the profits from here. Just so like making the stock earn its right to sell. And that's on takeout bars. So we need to work on that. Hold versus scalp. Yeah, I need to really work on not scalping. Risk budget rule, 1 day equals one of the following: one full risk thesis or multiple small blobs. Okay, financial. This week did not expose weaknesses, it exposed readiness. You are readily structured correctly, choosing better stocks, just one step away from monetizing correctness. That step is holding the right traders longer, not trading more. No. What do I do next? So now I ask you some interesting. How do you get interesting? Is it ask if you're Oliver Velez himself and give me an honest critique of my performance and plan to improve next week. So this is the most important part of the video. So I'm going to speak to you the way Oliver Velez would speak to you about a serious student. Speak to a serious student. It's not to hype you up, not to tear you down, but to tell you the truth you can use. No fluff, no coding, just the work. Oliver Velez style assessment. First, let me be very clear. You're not a bad trader. Hey, that's good. That's good. You're not an undisciplined overall. That's shocking. Coach said I was uncoachable throughout my whole basketball career. You're not guessing. Okay, okay. You're doing something much more dangerous. That's not good. You are right, and you are not getting paid enough for being right. That is the core issue. Interesting. Interesting. The honest critique. You read the market well, better than most. You constantly identify Fab Four comparisons, elephant bars, 20 SMA reactions, positions of power, when a stock should move. Your chart reading is not the problem. If this were a chart reading exam, you'd pass. Ooh, I like it. I enjoy reading the charts. You don't trust your winners. That is because of repetition and me needing to see it more often. I just need to do it more, do it more, do it more, more execution, more confidence. So this is a real issue. Yeah, I got trust issues. Call me Drake, whatever. Sniped trades that deserved holdings, took profits because you were afraid of giving it back, managed tier one stocks like tier three stocks. Let me say this plainly, you're treating your best trades like they're your mistakes. This backwards. That's backwards. Let your ego go. Let your ego show up in the wrong places. Ego didn't show up in holding winners. Ego showed up in oversizing early, wanting to be right now, trying to force Apple to behave like Uber, or watching P&L instead of structure. Ego is not confidence, ego is impatience. One bad day was a self-inflicted wound. On January 8th was not the market's fault. That loss came from size before confirmation. One thesis consuming all of your risk, breaking your own rules knowingly. The good news, you stopped. You didn't spiral. That tells me you do have discipline. It just slipped. Your stock selection is improving, but not final. You know, Uber and Amazon are your best stocks, yet you still gave mental energy to Google and JPM. You analyzed them like they owed you something. They don't. The market doesn't reward fairness, it rewards alignment. What you actually did right this week, this matters. You respected max loss. You didn't revenge trade. You all, they forced me to respect the max loss, and but I'll take the win. I'll take the win. You walked away with a low edge Friday. You reviewed your mistakes honestly, and you asked the right questions now. Most traders never get this far. The core diagnosis in one sentence: you are a momentum trader who is afraid of momentum when it's working and impatient when it hasn't confirmed yet. Fix that, and your results change immediately. The plan for next week, non negotiable. This is not a suggestion list. This is a reset protocol. Trade fewer stocks, period. Next week, your universe is tier one, primary Uber and Amazon. Tier two, secondary only if perfect, DISA. Observe only Apple, Google, and JPM. If you trade more than two stocks in a day, you're wrong. Wow. Interesting. Interesting. Earn size. Don't panic. Predict with it. New rules. First entry, small. Confirmation equals add. Never the other way around. Confirmation equals that. If you break this rule once, you stop trading that day. Why? Because this is the rule that keeps professionals alive. One trade per thesis. You don't get multiple early attempts, flip-flopping. Let me see if this holds. You get one idea. If it fails cleanly, you walk. Being selective is not a weakness, it's leverage. Hold a core on tier one trades. This is the biggest change. If Uber or Amazon, Fab Four, or Elephant trend intact, you must take partial profits, keep a runner, and let the 5 minute chart take you out. Dang, if you exit the entire position early, that's a rule violation. Hey, that would make me a better trader. I ain't gonna lie. Ain't gonna lie. Ain't gonna lie. Stop watching your P&L. This is killing your winners. Your job is not to make money. Your job is to execute structure. Money is the byproduct. If you catch yourself watching P&L, walk away from the screen for 60 seconds. Come back and look at the chart only. Red Day Protocol. If you're down 200, reduce size. 300, stop trading. 400, platinum close. No debates, no exceptions, no. One good trade fixes it. Professionals survive, amateurs hope. What if I expect if you do this? What I expect if you do this? If you follow this plan for one full week, your win rate may go down slightly. Your average winner will go way up. Your stress level will drop. Your equity curve will smooth out. And most importantly, you will start feeling bored again. That's a good sign. Final word. You don't need more knowledge. You don't need more setups. You don't need more trades. You need to trust the right trades, stop forcing the wrong ones, let momentums do what they're supposed to. You're closer than you think. Now go trade like you believe what you see, not like you're afraid of it. On that note, we'll end this. I'll see you on Monday. We got some rules and things to do.